Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host. We're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And today with me, hybrid expert and nationally recognized gun in all that is morbidity, Joe Rasich.
Well,
Joe.
thank you, Steve. A pleasure being on the show today.
Joe, I don't know of anybody in the independent marketing channel, and I mean this sincerely, that has been a huge proponent of hybrid products, putting morbidity and mortality products together like you. Now, in the back of the day, we did do disability waiver on life insurance and mortality products. But when we think about what we're doing today, it's bizarre.
Well, you know, Steve, these products are so good for the middle class. Mm-hmm. I mean, you know, the rich people have been able to kind of take care of themselves. Mm-hmm. But when you think about the middle class and the fact that, you know what, it all comes down to price and affordability. Mm-hmm. When you think about the saving habits of the American people, if they're not even saving money, how can they spend money for products that would actually benefit them? Well, but these products are very competitive and they're built for them. So if they take advantage of it, they can protect themselves and their family.
I am looking at the statistics, and this is the big thing we're always talking about. Looks like the odds. And remember, I don't know about you, Joe, I play the national football odds. I was in the CNN political poll for the election. Election's over, finally, thank you for that. But look at the odds of actually experiencing a long-term care or some kind of care event in your life. It's actually over 70%. The moment you cross over age 65, you start to experience 70% of that block of the population in America will experience some long-term care event.
You know, again, that's what I'm talking about. You think about people, they insure their homes, and you think about the percentage of people whose homes actually burned down. Well, we saw what happened on the or flooded, knocked out by hurricanes. You know, we saw that on the in the Northeast. But relatively thinking, just a small percentage of people actually have. Well, they have coverage, but they never have a claim for it. But when you're thinking about long-term care and the fact that 70% of the people at some point in time over 65 will suffer a long-term care event. That's huge.
It is huge. And when you think about it, a decade ago, we were playing only in long-term care nursing homes. There was none of these iterations of different care. Listen to the care we have now. We have assisted living.
Right.
We now have home care. We have adult day care. We have the traditional nursing home. Now it's migrated to 4 different ways to manage your care in your geriatric life.
Well, which one of those where you actually could have a family member take care of you?
Oh, yeah. I mean, you think of home care.
Yeah.
I mean, that'd be perfect.
You think home health care, you think you're going to have somebody from an assisted living facility come by and take care of you. But you could actually receive claim money from an insurance company even if your spouse or your daughter or your son's taking care of you. So, I mean, the opportunities out there right now for care are really fantastic.
I'm looking at the statistics because our whole part of our show today is the facts, the probability stats, and where are we at as an industry when it comes to long-term care. How Americans plan to pay. Now remember, it's how they plan to pay for long-term care, not what actually happens.
Sure.
So they plan on doing it through their savings. Now remember, you just said earlier in the segment, nobody's saving enough. We're in a retirement crisis already. And Social Security, I don't know if it's going to be able to pick up the tab. Other people are banking on not only Social Security, but on private pensions, their 401ks. They're banking on Medicare, their income at the time that this occurs, because some people will be working into their 60s. Some people are looking at actually long-term care, which is way down the list that people that actually have, as you pointed out, individual contracts. And then you go all the way down, disability insurance. But here's the bigger one, money from friends, money from children. Uh-oh, now all of a sudden, mom and dad need help from the next generation down to fund this, and remember, many go through bankruptcy. Now that was a surprise to me.
Well, you know, when you think about this too, I think it's denial. Again, the statistics say that when they survey people, that they say, well, that's not going to happen to me. You know, that's somebody else. It's not going to happen in our family. So it's, you know, there's that denial that that's going to happen. Number 2, oh, my kids will take care of me. You know, they'll buck up. They'll take me in. They'll come out and visit with me. Well, you know, that's assuming the fact that they don't have anything else to do, that they're not trying to provide for themselves and their families. Right. And I don't think insurance agents have really done a good job of meeting this need I don't think they're asking people. I think they automatically think, which it is somewhat expensive, for the insurance coverage. That's why these hybrids are so good.
Right.
Those long-term care policies are too expensive, so their agents don't even approach them.
When you think about it, this is a morbidity product, just like medical, just like disability, and long-term care in any version, even the writers, have legal definitions. And I think that kind of spooks most agents because they draw back a little bit. There's definitions here. Do I have it down? Do I understand what the specimen policy actually says? So we're kind of caught off guard. Here's a few stats before we go to the break. 93% of care overseers, people who actually take care, use their own income to help mom and dad. Think about that, 93%. 72% personally provide care to a loved one in their home. And then the last stat, 53% took loved ones into their home and began to pay for their care out of their own personal savings accounts, which were already being depleted by the recession. Now, we're up against it. I mean, this is what's happening. And so we're seeing families actually go to the wall financially when there's a better way to do it. When we come back from the break, I'm going to talk about all the issues of more of the statistics, more of the facts, and put you in the middle of an idea that might help you actually think about selling long-term care hybrid products, whether it's life insurance or on annuity platforms. All this week, we're going to spend that time managing both of those chassis for your benefit and for your practice. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Joe Rasich. And remember, you can order today's giveaways at thebiz@brokersalliance.com. And here's what we're giving away. The long-term care manual, and it's to die for. It's basic. It has basic graphs to it. I think you'll appreciate it. The long-term care consumer survey. I'd be using this with every client I ever met. And our patented PowerPoint presentation. It's only for agent use only, but it's probably the best educational tool. And just a heads up, before moving forward with any of the ideas we talk about the show, especially if they're tax issues, always consult your tax attorney and your broker-dealer compliance officer. And in this segment, we're continuing in our stats, market demographics. We want to talk about the facts and try to build a compelling case of why you need to look at hybrid products.
And Steve, you mentioned the fact that 70% of the people over 65 will use or need long-term care assistance. But overall, 50% of the people, it doesn't make any difference if you're over 65, 50% of the people will have to use some form of long-term care assistance, even young males.
Well, didn't we see
kids.
an article? Remember there was an article?
Exactly.
About
there was
these
an
young
article
people?
about these younger people. I mean, again, there's a rising cost or a rising situation with strokes. Also, more being obese. It's causing some problems, and it's defining them as not being able to do 2 of the 6 ADLs, activities of daily living. But going back, when you ask people, especially at the elderly people, or the people who are 65 years old, do you know anybody? Do you friends, relatives, family, co-workers that had gone into a nursing home or needed some home health care? They'll say yes. So all of these statistics are there. So it's up to our profession to bring up some alternatives for them.
Listen to these numbers because these numbers are only going to get bigger as inflation and the cost of living indexed impacts these numbers. For example, Joe, it says here that if you're having assisted living, and this isn't even full-blown nursing home, I'm just talking assisted living, it's going to be $3,369. That's probably my tab for Social Security. My Social Security's gone. A month. So that's 40 G's a year just for assisted living. Now, true conventional nursing home, totally different story. A semi-private room is going to be about $5,931 a month, and a private room is $6,570. I say, hey, don't go chintzy on me if my kids are watching. Don't forget, I want you to remember, give me the private room. But then home health aid. $20 plus an hour. So, I mean, those are the costs. They're real costs. These are costs that we're bearing today. This isn't maybe it'll happen. The probability stats of you being post 65, age 65, you will experience, 70% of our population will experience it. Now, interesting to know, baby boomers now are walking, right? We're just coming into this whole arena.
10,000 a day.
We're part of the ARP nation now. I mean, think about it. We are part of the largest growing geriatric demographic. And we right now are making decisions based on how we saw our parents live and how they passed. And now we're starting to be able to change the way our mindset thinks on long-term care. And I love the idea of middle class having an option, because most of them are not going to be able to afford a regular standalone contract. Nothing wrong with them. I just don't think people can afford them.
Sure.
So we need hybrid products.
You know, you think about bankruptcies in the United States. You know, people think that it's because they lost their jobs and they can't earn a living. But statistics show that it's due to a health problem, a health issue, that they've ended up having to file bankruptcy because they owe hospitals, nursing homes, or whoever plenty of money.
I'm shocked by this statistic because it went way down to age 40, but it actually goes into what you were talking about, Joe, about these young people having cardiac arrest, strokes under age 40. I don't even get that. But think about this. The average household between ages 40 and 70 has assets of about $100K. That's it.
And that's including the equity, if there is any more
if
equity
there is any in their home,
in their house. Maybe
So-
that should be 50% or 50,000.
It should. And think about this. When you survey Americans, they all agree that the risks are there. Nobody debates it. And this is the disconnect. I totally agree with it. I see the statistical, it's compelling. But then I go back and say, yes, but I don't want to take my wallet out. See, what's that disconnect, Joe?
Again, it's their threshold for saving and accumulating money. They don't have money to save. They're living from paycheck to paycheck. That $100,000 actually amazes me. I didn't think that, I thought the statistics said that it was fortunate if a family had 2 months of living expenses in the bank, not $100,000. So that's very, very generous. I think that's overinflated.
Well, think of this. 75% will use their savings to pay long-term care, and long-term care costs right now at present value are going to exceed $60,000 almost in every facility in America in true nursing home care.
But do you think people just think that Social Security and Medicaid will take care of that?
I do, and
I think that's
that is the mentality. People think the government's going to pick up the tab, and remember, we're sitting at $16 trillion. By the time we go to the next election at 2016, if we don't do anything with the budget, we'll be at $22 trillion in 2016. They're not going to be in any position to help anybody. So we have to think about it. We have to be self-reliant. We need to think about these things now.
And again, the whole week is about hybrid products and how they are affordable today. And it may be a bridge. It may not necessarily be, the number one reason that these people, buy these to protect themselves, but they can use it as at least a bridge, that is going to cover some of that cost. Maybe not 100% of it, but they don't have any of it covered except for their savings. So, again, the hybrid products are amazing. We have presentations for the advisors to be able to talk to their clients intelligently about these problems and how you can solve them.